Hi, can you answer this simple question of accounting that most of the time got repeated in many examination? That is, what do we call the account that records expenses, gains and losses? So what do we call the account? Account name that records expenses, gains and losses. Do you call it as personal account or real account or nominal account, and finally none of the above? Can you tell me the right answer? Did you get? Let me tell you. The account that records expenses, gains and losses is known as nominal account. Of course friends, the account that records expenses, gains and losses is known as nominal account. Because a nominal account is an account in which accounting transactions are stored for one fiscal year. Okay, no problem. Let's try another question. Let's see. The balance sheet is a statement of. So what does balance sheet shows, or what does it indicates? Your answers are: is it assets? Is it statements of assets, or statement of liabilities, or statement of capital, or all of the above? Can you tell me the right answer? So what balance sheet statement shows? The correct answer is all of the above. Of course, my friends, balance sheet shows it is actually the statements of assets, liabilities as well as capital. So friends, in this video, we are going to learn the most repeated accounting MCQs that were asked in many BCom and many other commerce examinations. I'm damn sure you'll be having a lot of ideas about accounts and accounting related questions. And you'll be having a lot of confidence to answer maximum questions from the accounting sheets. So let's begin. So friends, welcome to Dear Competitive Exams, where we help you to prepare for a lot of upcoming competitive exams. Okay, so let's start today's session. Friends, if you have not yet subscribed our channel, please subscribe to get a lot of interesting videos for your exams in upcoming time. Let's begin today's session. The first question is, accounting provides information on. So what information that accounting provides? Is it on cost and income for managers? Or is it company's tax liability for a particular year? Or is it financial conditions of an institutions? Or all of the above? So what accounting provides information about? The correct answer is all of the above. Yes friends, accounting provides information on cost income for managers, company's tax liability for a particular year, and financial condition of an institutions. Okay, so accounting provides information on all these three things. Hope you understood. Let's go for the next question. The long-term assets that have no physical presence. Okay, we are talking about the long-term assets that are not physically present, but they have value known as. So what the value is known as? They are known as the current assets, or fixed assets, or intangible assets, or investment. So what do you call that assets, okay, that are not physically present but they have value? Okay, so the answer is, we call intangible assets. Friends, intangible assets is an asset that is not physically in nature. They're not physically present and physically it cannot be seen. Example like, let's say goodwill or brand recognitions, and intellectual properties such as patents, trademarks, and copyrights. These all things we cannot see them literally, physically, but still they have the value to it. So the intangible assets are the assets that are not physically present, but they have value. Okay, and the examples of intangible assets are like goodwill, intellectual property like patents, trademarks, copyrights, etc. Right. So hope you understood. Let's move on to the question number 3, and that is the assets that can be converted into cash. Let me repeat, the assets that can be converted into cash within a short period, let me take like 1 year, are known as. So what do you call those assets that can be converted into cash within short period of time, like an year, in 1 year? So what do we call those assets? Do you call them as the current assets, fixed assets, intangible assets, or investment? So what do you call that assets that can be immediately converted into cash within a short period of time, like within 1 year? So can you get the answer? The answer is, here we go, we call them as the current assets. Yes friends, current assets include like cash, cash equivalents, or I can say account receivable, or stock inventory, or prepaid liabilities and other liquid assets. Okay, so these assets can be immediately converted into cash within a short period of time. Okay, so any assets that can be converted into cash within short time period, we call them as the current assets. Right? Okay, let's move on to the question number 4. The patents, copyrights, trademarks are, what do we call these? Do we call it as current assets, fixed assets, intangible assets, or investment? Most probably this question was earlier we did it. So what do you call the patents, copyrights and trademarks? Guys, as I told earlier, the patents and copyrights and trademark are the things or that cannot be seen physically. They're not physically present in the nature. Okay, so any assets or anything that is not physically present but they make value, they make value of it. So those kind of assets are known as intangible assets, right? So those intangible assets are like trademarks, copyrights, let's say goodwill, brand recognitions, so on and so forth. Hope you understood about the intangible assets, right? Along with this. Okay, let's move to the question number 5. The debts which are to be paid within a short period of time are known as, like 1 year. We are asking you that the debts which are to be paid within short period. So what do you call them? Do you call them current liabilities? Those debts, do you call them as the current liabilities, or fixed liabilities, or contingent liabilities, or all of the above? So what do you call those debts which are to be paid, that should be paid within short period of time? So those kind of debts are known as current liabilities. Okay, friends, current liabilities are a company's debts, okay, that are due within 1 year or within a normal operating cycle. Okay, that should be paid, must be paid within short period of time. So those kind of debts are known as current liabilities, right? Okay, let's go for the question number 6. The sales income, okay, of a business during a given period is called as. So what do you call that sales income that we gain by doing credit and cash in a business, and that too in a particular period of time? So what do you call those kind of sale? Do we call it as transactions, sales returns, turnover, or purchase returns. So what do you call that kind of sale? We call the sale as turnover. Friends, in the investment industry, the turnover is defined as the percentage of portfolio. Okay, you getting me? It is called as the percentage of portfolio that is sold in a particular month or year. So the sales income that goes based on credit and cash in the business for a particular period of time is known as turnover. Let's move on to the question number 7. Any written evidence in support of business transaction is called. So what do you call any kind of written evidence in support of a business? Do we call them as journal, ledger, ledger posting, or voucher? So any proof. Here, any proof that we issue or that we pass during a transaction. So what do you call that evidence, that proof, that sheet? So finally, we call it as a voucher. Friends, any written evidence in support of a business transaction is called a voucher, because vouchers are the primary evidence of a business transaction having taken place. Okay, hope you got. Let's move on to the question number 8. The account that records expenses, gains, and losses is any account that records expenses, gains, and losses in a business. What do you call that account? Do we call it as a personal account, real account, nominal account, or none of the above? Did you get the answer? It is called as a nominal account. Friends, the account that record expenses, gains, and losses is nominal account. Okay, because in nominal account itself, we do all kind of these expenses, gains, and losses, right? Okay, let's move on to the question number 9, and that is real account records. So what does real account records? So why do we use it? To record what kind of transaction the real account is used. Do we record here dealing with the creditors and debtors, or dealing in commodities, or gains and losses, or all of the above? Friend, the real account is records dealing in commodities. Okay, so if you want to know what is commodities and all, so please watch my next upcoming videos. In that, I'll get to explain in detail what is the meaning of commodities and all those stuff. Alright, so let's move on to the question number 10. In journal, the business transaction recorded as same day. In journal, the business transaction recorded on same day, next day, once in a week, or once in a month. In a journal, a voucher or book, the business transaction recorded on the same day, or next day, or once in a week, or once in a month. Guys, let's get the answer first. The answer is same day. Friends, in general, the business transaction is recorded on the same day. I mean, it is maintained or written on the same day. A journal, which is also known as a book of original entry, it is the first place that a transaction is written in accounting records. So whenever you start maintaining the accounting records of any transaction, so journal is the first book or kind of voucher where you enter all kind of transaction that take place on a particular day, right? So it is recorded on the daily basis, right? So let's move on to the question number 11. The process of entering all transaction from the journal to ledger. What do you call this? What do you call the process of all transaction that we put from journal to ledger. Do we call that process as posting, entry, accounting, or none of the above? So what do you call the process? That process is known as posting, right? Friends, the process of entering all the transaction from the journal to ledger is called posting, because posting refers to the process of transferring entries in the journal into the accounts in the ledger. Okay, so posting to the ledger is the classifying phase of accounting, right? Okay, let's move on to the question number 12. That is, the following is a statement showing in the financial status of the company at any given time. There's a statement below, and that statement shows the financial status of the company. What do you call that statement? Do we call it a trading account, or profit and loss statement, balance sheet, or cash book? So any statement that shows company financial status in a particular time or of a particular time is called as balance sheet. Yes friends, balance sheet is a statement that shows the financial status of the company at any given time. Okay, it means the balance sheet together with the income statements and the cash flow statement make up the balance sheet of any company of a financial statements or a financial year, right? Okay, let's move on to the question number 13. The balance sheet is a statement of what? Balance sheet shows us. Does it show the assets or liabilities or capital or all of the above? So it is all of the above, because balance sheet shows us assets, liabilities, and capital account statements, right? Let's move on to the question number 14. In a journal, the business transaction recorded. So how does a business transaction is recorded in the journal? On daily basis, same day, next day, once in a week, or once in a month? As we know, in journal book, we record the business statement or transaction statement in a business on the daily basis, or I can say on the same day. Okay, is known as original entry. I mean, any transaction that takes place in accounting is recorded in the first time. The first place is journal, right? Okay, let's move to the question number 15. Balance sheet are prepared daily, weekly, monthly, or annually. So when does balance sheet actually get prepared? Daily basis, weekly basis, monthly basis, or annually, yearly basis? Right answer is annually, yearly. Okay, friends, balance sheet are prepared annually. Okay, it lists the current and fixed assets on the left side of the sheet and liability and owner's equity, that is called capital, on the right side, and it is maintained or prepared at every year. So annually, the answer, right? So balance sheet is prepared annually. That means yearly. Let's move on to the question number 16. The following are or is the current liabilities. Those are bills payable, outstanding expenses, bank overdraft, or all of the above. So what do you call? So what among three, which is known as the current liabilities? Friends, your right answer is all of the above. Of course, all three of these known as current liabilities: bills payable, outstanding expenses, or bank overdraft. Okay, so they comes under current liabilities. Let's move on to the question number 17. Current ratio. What is current ratio, or what is it made up of? Is it made up of or done quick assets and current liabilities? Quick assets divided by current liabilities, or current assets divided by current liabilities, debt or divided by equity, or current assets divided by equity? Here right answer is current assets, current liabilities. Guys, current ratio is a comparison of a current assets to current liabilities. Okay, it's calculated by dividing your current assets by your current liabilities. Okay, then only we get current ratio, right? Let's move on to the question number 18, and that is liquid or quick assets. So what kind of assets are known as liquid or quick assets? Current assets minus stock plus work in progress, or current assets plus along with stock plus work in progress, or current assets plus stock plus work in progress, or current assets plus work in progress minus stock. Friends, liquid or quick assets are current assets, and that we subtract or minus stock plus work in progress. That is known as the liquid or quick assets. So right answer is D. Let's move on to the next question. Identifying the correct sequence of accounting process. So what is the correct sequence of accounting process? So what do we do first, second, third, and fourth? Your answers are communicating, or recording and identifying, or recording, communicating, identifying, or identifying, communicating, and recording, or identifying, recording, and communicating. The correct answer is question number D. The correct sequence of accounting process is first we identify, then we record, then we'll go for communicating, right? So this is the process of accounting. Let's move on to the question number last, that is auditing refers to. So what does auditing mean? Is it reporting the financial information, or examination of financial information, or preparation of financial statements, or maintaining the ledger accounts? So what auditing refer to? What does it indicate, or what does it show? The answer is B. It is auditing is examination of financial information. Friends, auditing refers to examination financial information. Okay, a financial audit is an objective examination, okay, and evaluation of the financial statements of a particular organization to make sure that the financial records are fair, they're correct and accurate representation of the transaction they claim to be present. Okay, so every company or every organization does some kind of transaction every year, and to check them, to know their authentication, okay, how fair they are, how accurate their transactions are, to check that, to examine that financial information, the auditing take places, right? Hope you understood, friends. If this video has helped you, do not go without subscribing and hitting the like button and sharing your views in comment section. That will help us to bring such kind of great videos for you for your examinations. So thanks a ton for watching. Take care. See you in the next video.